Now we are heading towards the most important step towards the calculation of our income tax computation, and that's about the rate application. So, as what we are doing right now, we are figuring out that how the five-step approach is being applied in order to determine the tax figure for an individual, where the first step is done, and it's about segregation of income into non-saving, saving, and dividend column. Then we have discussed the second step, which is about the deduction of qualifying interest. And then the third step has been done as well, and that's about the deduction of personal allowance. Now we are moving towards the most important step, and that is to calculate the tax liability. In this video, I will let you know that how the rates are to be applied in order to determine the tax liability for an individual for a particular tax year. So there you go. These are the tax rates, and they will be given to you people in your exam. And by the way, I will keep on telling you people throughout the syllabus that which rates will be provided to you people in your exam. So just consider that examiner is in a mood to help you people a little bit by providing certain rates and rules in your exam, and that will be found on the exam portal under rates and allowance table. So, as we all know that whenever we are going to compute our tax liability, we've got three columns: non-saving, saving, and dividend. When it comes to non-savings column, preferably we apply tax rates on non-savings column. If the taxable income for the non-savings column is going to be of 37,700 pounds or below this limit, then the basic rate shall have to be applied, and that is of 20%. So if the taxable income for a person is like going to be 37,700 or less than that, that's basically the point where the basic rate has to be applied, and that is of 20%. If the taxable income of a person is going to be more than 37,700 pounds, if it is going to be 37,701 pound, then the high rate is going to be applied. The income is said to be falling in the high rate band, and here the high rate shall have to be applied, which is 40%. From 37,701 till 125,140 pound. From 37,701 till 125,140, the high rate shall have to be applied, and the high rate is of 40%. Would you like to see that how much of the figure is going to be accommodated in the high rate band? It is of 87,440 pounds. So starting from 37,701 till 125,140, if you are going to take a difference of the these two extremes, then you will come to know that 87,440 pound is the maximum figure which is going to be accommodated in the high rate band. Over the high rate shall have to be applied. And what is the high rate for non-savings income? That's 40%. Keep this thing in mind that till 37,700 basic rate was to be applied. So when you're going to determine that how much of the figure is going to be found in the high rate band, what is the capacity of the high rate band, then from 125,140 pounds, you will have to deduct the previous limit. And that's how you will be able to come to know that 87,440 pound shall be found in the high rate band. Don't deduct 37,701 because 37,701 is also found in the high rate band. So don't deduct it. Rather deduct the previous limit where the basic rate band has come to an end. And where the taxable income for the non-savings column is found to be of more than 125,140 pounds, that's basically the point where we can say that a person has to pay tax over an additional rate, and the additional rate for non-savings column is of 45%. So technically under non-savings column, we can find three rates: the basic rate, the high rate, and the additional rate. Once you are done with the application of rates on non-savings column, then you have to move towards savings column, and afterwards you will have to move towards dividend column. But let me just tell you people in detail that how the rates has to be applied on non-savings column with the help of numerous examples. Then I'll gradually move towards savings, and afterwards I'll tell you that how the rate implication has to be done on dividends column. So let's have a look at the first question. So let's say there's a person who is called Mr. A. We are doing income tax computation. And as what I've told you, that we have to mention the tax year as well. So for which tax year we are going to do the calculation, that's the tax year 23-24. So as per rule, we are going to make 3 columns: non-saving, saving, and dividend. For instance, this person has got an employment income of £25,000, trading profit of £8,000, and rental income of £5,000. All of these incomes shall always be mentioned under non-savings column. But let's say he does not have any savings or dividend column. And by the way, if a person does not have either savings or dividend column, then there is even no need to make the column for those sources of income which are not existing. So let's take a total, because once the segregation of income is done, then we come to know what the total income for each column is. So for non-saving, the total is of £38,000. For saving, it is 0, and for dividend, it is 0. Then we are going to deduct interest paid on qualifying loan. Let's suppose this individual who is called Mr. A, he has got a qualifying loan on which he has paid an interest figure of £500. So whensoever the interest is paid on qualifying loans, then they are preferably deducted against non-savings column. So £500 is going to be deducted against the total column, and that's how we come to know what the net income is. For non-savings, the net income is now left to be at £37,500, against which we have to deduct the personal allowance. And we already know what the figure for personal allowance is. Yes, it is of £12,570. So £12,570 is going to be deducted against the net income, and that's how we come to know what our taxable income is. So our taxable income is of £24,930. So once we have gone through 3 steps, segregation of income, deduction of interest paid, and deduction of personal allowance, there we come to know what the taxable income for a person is, and this is the income on which tax rates shall have to be applied. So now what we have to do is we have to apply the tax rates. Now, as what I've told you, that if the taxable income, if the taxable income for non-saving is found to be either equivalent to or less than £37,700, there the basic rate shall have to be applied. And what is the basic rate for non-savings income column? That's correct, it's 20%. So, first of all, I would call this person to be a basic rate taxpayer, because he shall be paying tax over a basic rate. So I will call him as a basic rate taxpayer. And what is the basic rate? That is 20%. So now I'm going to calculate the tax liability. £24,930. That is going to be multiplied with the basic rate of 20%, and that's how we come to know what the tax liability is. So in this regard, 24,930 is going to be multiplied with 20%, and there you go. Our tax liability, our answer is £4,986. So that's how the tax calculation is done, right? I hope you find it very easy. Now let's move towards a little bit tricky question. There you go. Again, there is a person whose name is Mr. A. What we are going to do? We are going to calculate his income tax figure. And for which tax year? Of course, the current tax year, which is going to be tested in your exam in most of the cases, that is the tax year 23-24. Here, let's say his employment income is of £30,000, his trading profit is of £18,000, while his rental income is of £15,000. And whether it's employment income, trading profit, or rental income, they all are to be mentioned under non-savings column. By the way, just to keep the example simple, there is no savings income, there is no dividend income. And once you are done with the first step, there you have to come to know what the total income for this person is. Let's say for this person, the total income for non-savings is £63,000. For saving, it is 0. For dividend, it is 0. Then let's say this person has paid a qualifying interest of £1,000. So whensoever an individual is going to get a qualifying loan on which a qualifying interest is being paid, that figure is going to get deducted against his total income. So let's say his qualifying interest figure is of £1,000. Once the qualifying interest is deducted, there the person would come to know what his net income is. His net income is of £62,000, against which, of course, we have to deduct the personal allowance. Here comes the third step, the deduction of personal allowance, which we all know that's of £12,570. And afterwards, we come to know what our taxable income is. Actually, we have to go through each and every step, and it is the taxable income. It is the conclusion of the third step on which the tax rates are to be applied. So what the taxable income for non-saving is? £49,430. As per question, there is no savings and no dividend income. So I will have to check this person's status first. This person has got a taxable income of £49,430. Let's have a look at the tax tables. His income is more than £37,700. In fact, this person's taxable income is going to be found greater than £37,701, but it's not going to cross the threshold of 125,140. So till £37,700, this person will have to apply the rate of 20%. And the income which is found to be in excess of 37,700, on excessive income, the next rate, the higher rate, shall have to be applied. So I need to see that to which extent will this person have to move. This person has to apply higher rate. He's not just confined to the basic rate. He will have to apply even the high rate as well. This is the highest most rate that he will be applying on his income. So I shall give him a title of a higher rate taxpayer. So I shall call this person as a higher rate taxpayer, but I will have to apply the rate step by step in a gradual manner, as his income, his taxable income is of £49,430. So on first 37,700, the basic rate shall have to be applied, and the basic rate is of 20%, is equal to 37,700 into 20%. So his tax liability is of £7,540 for the taxable income till 37,700. But his income is greater than 37,700. So whatsoever income is found to be in excess of 37,700, the high rate of 40% shall have to be applied. So £49,430 less £37,700, there we will be applying a high rate of 40%. So 49,430 less 37,700 into a 40%, and that gives us a tax figure of £44,692. Now I'm going to take a total is equal to sum 7540 plus 4692. Together it makes a total tax figure of 12,232 pounds. So that's basically our answer, right? Now, move towards another question. And as what I have already told you, that first of all, I will be thinking about three steps. I mean, segregation of income, deduction of interest paid, and then we have to consider about the personal allowance deduction. Once we are done with the three steps, then we come to know what the taxable income is. So I'm straight away coming towards taxable income because now I believe that you people have a good grip on how the first three steps are to be applied. So I will be like straight away telling you people what the taxable income is. I mean, what figure comes out after the application of three steps. And there I would now keep on focusing on applying the rate so that you people will develop a good grip on the application of tax rates. So once three steps are done, here we come to know what the taxable income is. For non-saving, the taxable income is of £165,000. And I have just kept these two columns as zero. For instance, this person called Mr. B, he does not have any savings income. He does not have any dividend income. He just have incomes related to non-savings column. There I applied the first step, then deduction of qualifying interest, then the personal allowance deduction. And afterwards, we came to know what the taxable income is. And the taxable income for this person is of £165,000. Now, first of all, I need to decide that what the taxpayer status is. I'm just going to take the total of his taxable figure. His non-savings taxable figure is £165,000. By the way, there is no taxable income under savings column, and there is not even a single pound is existing under dividends column. So what is going to be his total? The total taxable income is of £165,000, and on the basis of total taxable income, I will decide his taxpayer status. So once again, let's have a look at the tax tables. This person's taxable income is of more than £37,700. So he shall be applying a basic rate of 20%. His income is even more than 37,700. In fact, his income is more than 125,140. So he shall be applying the rate of 40%. And as his taxable income is of £165,000, so I can safely say that he will have to reach to the additional rate band where he will be applying an additional rate of 45%. So he will have to move through all these bands. And what is the highest most rate he shall be applying on his income? Yes, it is 45% being the additional rate. So I shall call this person as an additional rate taxpayer. So if in a question it is said that what is the taxpayer status, you will simply say that he is an additional rate taxpayer because he will have to eventually move to the additional rate as well. By the way, there is no limit to additional rate. Whensoever your income is found to be greater than £125,140, from this point till infinity, you will be applying an additional rate. So his taxable income is of £165,000, and I will be applying tax rates gradually. On first 37,700, we will be applying a basic rate. The basic rate for non-savings is 20%, so is equal to 37,700 into 20%. So that gives us a tax figure of £7,540. Now, our income is not just more than £37,700, it is even more than £125,140. So, from 37,701, £125,140, high rate will have to be applied And that would mean that on how much figure shall I have to apply the high rate? On 87,440 pound. This is the maximum capacity, as what I've told you people before. This is the maximum limit on which high rate shall have to be applied. And what is that? From 37,701 till 125140, that actually makes 87,440 pounds on which a high rate shall have to be applied. So, on next 87,440 pounds, a high rate shall have to be applied, which is 40%. So it's like 87,440 into 40%. So that gives rise to a tax figure of 34,976 pounds. And whatsoever the income found to be in excess of 125,140 pounds, that's the income which will be falling in the additional rate band, on which additional rate of 45% shall have to be charged. So 165,000 less 125,140 pounds, as till 125,140 pounds, basic as well as high rate implication has been done. So I'm just going to apply an additional rate. And what is an additional rate for non-savings? Yes, it is of 45%. So into 45%. So that's how we come to know what our tax figure is. So that's of 17,937 pounds. Now I'm just going to take the total of these tax figures. 7,540 pounds, 34,976 pounds, and 17,937 pounds. So there you go. Your tax figure is equivalent to 60,453 pounds. So that's how the tax rates are to be applied when we will be having a taxable figure for non-savings column. And now I am taking you to the complex side of tax calculation, because when along with the non-savings column, you will be having either savings or dividend column, then how the rates are to be applied, this thing goes a little bit tricky, but let's do it in the form of numerous examples. And once you are done with the examples, the things will be like quite easy for you.